Bikaji Foods, from hospitals to snack or the fast food snack market, what's happening there? They've come out with numbers. Rishabh Jain, Chief Financial Officer, and Manoj Verma, Chief Operating Officer, they both join us. So good morning to both of you. Thank you for joining us. I'm going to start with you first, Rishabh. For 2 quarters on the trot, there is a sequential drop. So if I look at the year-on-year number, the revenue is growing. But if I look at the sequential numbers for 2 quarters, there is a drop. Why there is a year-on-year surge and why there is a sequential drop now for 2 quarters?
So if you look at last couple of quarters, so there's quite a seasonality you would see. So quarter three, if you look at, is quarter two and quarter three are very high, and that is on the back of Diwali, and we have a huge contribution which comes from our gifting and our sweets portfolio. That's the reason. So I think it would be fair to look at quarter on quarter, because that's like to like comparison or apple to apple comparison to make.
Your margins have gone higher in a tough quarter where other FMCG companies have suffered. Is it largely because you were hedged in terms of your cost of raw material, largely staples and then oil?
So basically, you'll see compared to first quarter where we've seen a key inflationary pressure in all the edible oil prices or key raw material. But post first quarter, we've seen very much deflation in all the palm oil prices, including all the key raw material, like all the pulses thing. So in last quarter also, we've seen substantial gain in all our raw material, and that's how we have gained a good gross margin in last quarter.
And to add to what Rishabh said, this tough times helped us learn good things, and that's where we thought of bringing in efficiencies across our cost centers, and that has helped us in towards as we move towards quarter four or towards the year end, and I think the year to come would be even helpful for that.
Okay, interesting. So Manoj, help us understand what kind of volume growth are you penciling in yourself for the fiscal year forward?
So in the year to come, what we look at it is that it would be, so your value and volume growth would be in line. So unlike the yesteryears where the value increase has been by far higher than the volume growth, that's what we look at. And rest, there's certain things which are unseen. But I mean, for all our budget purpose, for all our planning, we are looking at that as value and volume growth as same.
Yes.
Right. Manoj, do you also then work with your SKUs range? Because as I understand, from small packs of about 14 to 18 grams to family packs of 1 kg, I mean, you've got a wide variety. Are you sensing at all that the consumer is getting a little bit price conscious and therefore you will have to focus more on the smaller SKUs?
So I think each SKU play a different role. So when you talk of family packs, so that is in-home consumption. And that speaks the strength of the brand, because you will only take product to your house which the entire family is interested in. It could not be just for one individual. Whereas the impulse pack, the smaller pack you spoke about, is one time or on the go consumption. There it doesn't matter that what your brother or sister or the family member likes. You want it and you have it. So the smaller pack helps you get distribution. These are the packs which play the role to recruit new consumers, new customers to your bucket. Whereas the family pack helps you drive volume. So both has a different role. And as we grow, I mean, and which is what in fact we have projected, that currently as I speak, it is 58% business which comes from our family pack. Going forward, this will come down to 55% in another couple of years.
Rishabh, so let's understand the scenario for FY24. There was a seasonality which kicked in, and last 2 quarters we cannot look at quarter-on-quarter growth. But now that margins have stabilized, they are at 13.3, and the festival curve will start soon, starting from Janmashtami and then Dussehra and then Diwali. Do you think this could be a bumper year for Bikaji, because demand and margins, when they both come back, it will lead to operating leverage?
See, so we've done a multiple work at all input metrics, be it setting up plant it across all different part of country in last 1.5 years. Also setting up right team, right systems. So we've done all the thing in the right manner. So this year, of course, you will see last 5 years we've grown at 20% plus CAGR, and that's what we want to build in coming years also.
So Manoj, you're in middle of an capex cycle and cash flows are negative. Will they turn positive this year?
Of course, yes.
When you say of course
So
yes, how
basically, you will
much?
see.
Will you
Uh,
give more dividend? Will you do a buyback?
so yeah, so our target is to take. See, we as a board has kept have decided to give a dividend to up to 25%. So this year we're given close to 15%, and we'll take this to 25% in coming years.
You have to, let's say, give me a headline, and if the headline says Bikaji Foods to ET now, and this is their guidance for FY24, top line, margin, and cash flow. Fill in the blanks. I'm going to make a plate
So
which
see,
says Bikaji to ET now, exclusive guidance FY24.
See, we cannot give direct numbers basically, but yeah, see, you will see what we've done in the right manner in past. We'll continue to do in the future. So we've grown at 20% plus CAGR in last 4-5 years, and last 1.5 years we've done a major capex. So of course we'll grow at a much faster pace. That's what we want to say.
Manoj,
And from
so
bottom line perspective, of course, yes. So last quarter was 13%, but you will see overall as a year basis, we're done a bit of close to 11%, and that's what we are building the efficiency at all level. Be it doing a work on premiumization of product, being efficiency building across all cost centers. So that's what we are trying to do, and we of course will want to increase this to come in 200 to 150 basis point in coming 2 years.
Manoj, let's get the margin FY24 number. Will it be in and around last year's level, or this 13.3 which has come, which is expansion of 300 bips, it will sustain?
See, so we want to see we are seeing across full year numbers. So full year we are done close to 11%, right? So largely we want to take this to. Of course, we want to build this and we want to take at least 100 basis point higher. That's what our target is.
Manoj, can I get closing comments from you? You've been quiet.
Yeah. So I mean,
Either you
the
don't agree
last
with
year for
Rishabh or you want to
Bikaji,
add something more.
yeah. Yeah, so last year for Bikaji has been a historic year, wherein we went public, and just not this, we did a lot of things, which would be remembered for years. In terms of the expansion, what we did, I think, the growth, what we could witness is that we set our fundamental right. If I was to put some number, we have added about 100,000 outlets, so reach has increased by that. Now we've added our distributor base. We've added feet on the ground. So there are lots of things which has gone very well, and that gives us immense confidence. That to your question, that how would our next year look like? I think there's no reason that why it should be not better than for what it was this year. So that's what we feel, and we're confident about it.
So on that optimistic note, we'll wind it down. Thank you so much, both Manoj as well as Rishabh, for joining in and sharing with us your projections. That's Bikaji talking about, yes, seasonality is coming into play for revenue on a sequential basis, and 58% of their sales are at large packs. That clearly does help driving volume growth. Revenue growth will be at a faster pace than 20%.